Dear shareholders, I am pleased to report the performance of the company during the year 2018. The company's manufacturing facilities achieved second highest urea production ever of 2,522,000 tons, achieving 123% combined operating efficiency despite the old vintage of our plants. The country witnessed one of the worst devaluation of the Pak rupee during the year, leading to inflationary pressure, whereas interest rates also registered significant increase. In addition, the gas prices were increased substantially while the urea subsidy scheme was discontinued during the year, and the company had to pass on the impact to sustain its profitability margin. Normalization of urea market during the latter half of 2017 resulted in restoration of the company urea demand, and the company recorded the second highest all product offtake of 3,030 tons. Concentrated marketing efforts also enabled the company to improve combined FFC and FFBL urea market share to 53% as opposed to 52% of last year. The company thus created a new benchmark of the highest ever aggregate sales revenue of rupees 108 billion, including subsidy. Economization in operating and finance costs and improvement in investment income contributed further to the profitability of the company, with net earnings of rupees 14.44 billion, registering a growth of 35% over the year 2017. Earnings per share stood at rupees 11.35 against rupees 8.42 per share last year. In view of these promising results and in continuation of the company's commitment to offer attractive returns to the shareholders, the board announced a final dividend of 3.90 rupees per share, leading to the aggregate annual payout of around 78%, including interim distributions of 4.95 rupees per share. FFC Energy Limited, that is FFCL, has maintained its trajectory of profitable operations and declared dividend for the second consecutive year. FFCL has also successfully taken over operations and maintenance, that is O&M, of wind turbine generators and site administration and security from its O&M contractors. FFC Food Venture, 4G Fresh and Freeze Limited, also registered noticeable growth in local as well as international markets. The project is still in the development phase and requires continuous sponsor support. In order to achieve fast-track growth, services of the industry experts have also been engaged to acquire market intelligence and develop strategies for market penetration. FFC once again secured top awards in the ICAP and SAFA Best Presented Annual Report competitions, signifying transparency and good governance by the company. FFC has also improved its long-term credit rating to AA+, while short-term rating has been maintained at the highest level of A1+, demonstrating its very strong capacity to timely fulfill its financial obligations. The company also contributed around 36.8 billion rupees to the National Exchequer by way of taxes and levies, besides enabling savings in foreign currency of around $650 million through import substitution. FFC acquired 30% stake in Thar Energy Limited, TEL, with equity injection of rupees 1.46 billion during the year to establish a 330 megawatt power plant. EPC contract and financing documents of the project have been signed, and COD is expected to be achieved in 2021. Going forward, the disparity between input and output, GST rates, the long outstanding sales tax refundables, and subsidy receivables present considerable cash flow constraints for the company that require urgent governmental attention. Persistent pricing pressure, devaluation of Pak rupee, and increase in gas costs, etc., also continue to pose a risk to the company's profitability. Favorable government policies are therefore imperative for sustained growth of the fertilizer industry and the agricultural sector to ensure food security in the country. The board also remains focused on increasing shareholders' value through efficiency enhancement and local offshore diversification initiatives, an enduring contribution toward development of the farming community.